Canada and the U.S. shared seamless supply chains, booming tourism and cultural ties. But tariffs, fiery rhetoric, and consumer backlash are really throwing sand in the gears. Canadian campaigns are surging, travel south is stalling, and Canada is fast-tracking new trade routes. From collapsing border tourism to tariffs in overdrive to Canada rewriting its export playbook. The quiet payback is real. Let's dive into how these shifts are, honestly, reshaping North America's economic road ahead. In true boomerang fashion, the measures are bruising American consumers while fueling Canadian resentment. Before we shift to how Canada is responding, do us a favor and smash that like and subscribe button. It helps us reach more auto enthusiasts just like you. Now let's steer into the next development, Canada's bold pivot away from U.S. dependence, shifting gears. Canada rewrites its trade playbook. For more than a century, Canada's economy has leaned south, with the U.S. absorbing nearly 80% of its exports. But 2025 is forcing a sharp pivot. Tariffs and political friction are pushing Canada to diversify, creating new trade lanes and reshaping its economic identity. Between May 2024 and May 2025, U.S.-bound exports fell from 78% to 68%, the lowest in decades outside pandemic years. Gold exports to the U.K. soared 473%. Energy shipments to Singapore surged. Aluminum to Italy jumped. These are not stopgaps, but new lifelines. Canada's merchandise trade deficit even narrowed from $7.6 billion to $5.9 billion within a month, thanks largely to gold and mineral sales. Still, economists caution this may be a short-term boost as many firms rushed shipments ahead of tariff deadlines. Geography and integrated supply chains keep the U.S. as Canada's most practical market. Yet Ottawa's message is clear: over-reliance on one customer is dangerous. Diversifying as a nation is less abandonment than insurance in an era of weaponized trade. But diversification abroad is only half the battle. At home, a powerful movement is taking root, driving local pride, buy Canadian and building resilience. As trade tensions rise, Canada is fueling a homegrown countermovement. Buy Canadian campaigns have shifted from slogans to daily reality. With 67% of Canadians avoiding U.S. goods despite higher costs, this consumer push is reshaping demand and giving domestic producers fresh momentum. Businesses, meanwhile, are racing to secure U.S. access through USMCA compliance before the dispute. Only half of exports met its complex rules of origin. By mid-2025, compliance hit 2/3 and projections point to 90% by year's end. Costly audits and supply chain adjustments are the toll, but they keep crucial markets open. Policymakers are also tackling internal barriers. Studies suggest dismantling interprovincial trade walls could add $200 billion annually to GDP, giving tariff-squeezed industries a stronger domestic cushion. Energy remains Canada's ace. U.S. demand still runs high, but Ottawa is steering oil and gas exports toward Europe and Asia to blunt American leverage. And while consumers rally at home, politics is shaping the ultimate road ahead. Politics in the fast lane pushback, and what's next? Politics has become the decisive battleground in this trade conflict. Since July 20, 2025, when a new U.S. trade pact deadline passed without progress, Prime Minister Mark Carney has toughened his stance. His message is clear: Canada will not trade sovereignty for tariff relief, emphasizing resilience and diversification instead. Public sentiment mirrors that resolve. A February 2025 poll showed 91% of Canadians favor reducing U.S. reliance, while 2/3 now view America less favorably, with 65% vowing to avoid U.S. travel and 67% boycotting U.S. goods. This is more than temporary frustration. It marks a deeper identity shift away from automatic alignment with Washington. South of the border, Washington's approach is deliberate unpredictability. The move to 35% tariffs with shifting justifications from fentanyl to dairy creates what analysts call a floating rationale strategy designed to keep Canada perpetually off balance. The true stress test looms in 2026 with the USMCA sunset review threatening collapse. Yet amid uncertainty, Canada is rallying, diversifying exports, enforcing retaliatory tariffs, and strengthening unity. The era of unquestioned partnership is ending, replaced by a tougher, more calculated coexistence. All of this brings us to the bigger picture: Canada's hard-fought journey toward resilience. Verdict: from tariff turmoil to tougher self-reliance. Canada's 2025 journey through tariff turmoil has been a rough ride. Tourism stalled, exports rerouted, and costs climbed for households on both sides of the border. Yet out of the grind comes resilience. Canadian firms are diversifying, USMCA compliance is rising, and consumers are fueling a powerful Buy Canadian push. Policymakers are even dismantling long-standing internal barriers, turning crisis into reform. The US market still casts a long shadow, and political volatility remains a hazard. But the message is unmistakable. Canada is no longer cruising in America's slipstream. It's steering its own course toward economic independence. Now over to you. Can the Buy Canadian movement truly replace US products over time? How will American consumers react once higher prices hit home? What do you think will finally make Washington realize tariffs are backfiring? Drop your thoughts in the comments. And that's where we'll downshift for today. If you enjoyed this breakdown, don't forget to subscribe to PIT Vehicle Updates and Industry Insights. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's plenty more to explore.